Okay, so the 50% rule is for potential outside bars only. So first, you need to know what an outside bar is. So an outside bar, I'm trying to find a good example of one, is another name for an engulfing bar, which means, so this candle here, this 3, took out the bottom of its previous candle, and it also took out the top of its previous candle. So why do we care about that? How do we take advantage of it? Well, it gives you a high probability trade and an exact target. Okay, so for the 50% rule, there's a couple of rules. So the live candle, because remember, we're only acting on live candles. There's pretty much only 2 rules. The current live candle must take out one side, of the previous candle. Rule number 2, live candle must retrace 50% or more of previous closed candle. 3, this is more just a target. So your target is, how do I best word this? The side, happy Thanksgiving to all of you too. Okay, so target is the other side of previous closed candle. So that could be top or bottom depending on which way it's going. Okay, so there's the rules. So let's look. So I have the month, the week, and the daily. Okay, that's what we're working with. That's what I'm always working with for my setups. So let's look at Chewy. Okay, so this is Chewy this month. Okay, rule number 1, did it take out one side of the previous closed candle? Yes, it took out the top side. Okay, rule number 2, has the live candle retraced more than 50% of the previous candle? Just by eyeballing it, yes, it has. Now, how do you know for sure? You go and you get your fib tool. So I am using the fib retracement tool, and we're always comparing our live candle to the previous candle. So we want to measure the previous candle, not the live candle. So we start at the bottom, the very low, to the high, the very top. So our candles are always wick to wick because we want to know the highest price traded in that candle and the lowest price traded in that candle. Okay, so Chewy looks like we're going to go outside month. Okay, so what does that mean? Oh, hold on, let me talk about my fib settings. I have everything turned off except the 0, the 0.5, and the 1, because I'm not a fib trader, but I want to know when we're halfway through the previous candle if we've already taken out one side. So if you want to replicate it, that's what you do. You go to Style, 0, 0.5, 1. And it doesn't matter if you draw it from the bottom to the top or the top to the bottom. It's going to be the same. It's halfway through the candle. This is just a way a fast way to where we don't have to do mental math or any math at all. We let the little fib indicator do it for us. Okay, so now anytime we are below 68.40, we can be looking for Strat actionable signals to the downside. And we go down to the smaller time frames and look for a way in because we're always forward thinking. So we had a red 2 up followed by a red 2 down. So we think to ourselves, if this 2 up, 2 down triggers, could that potentially put us at the 50% retracement to become an outside month? So yes, it could. So that is an anticipatory trade using what you have. So you have, and you can see, you have a 2 up. So obviously the bulls didn't do their job this week, right? They were supposed to make a new high, but they didn't. So you should be looking short already because the week barely ticked up and they just started selling it off. So you want to be looking short, okay? And we know what our target is because in order for it to become an outside month, we have to take out 60.45. So our target on all the time frames, on the monthly, the weekly, and the daily, is 60.45. Okay? Now, if you missed the entry, I call these domino effects. So the daily will trigger the weekly, which will then potentially give us an outside month. So it's pretty amazing when you think about it like that. It's just like dominoes, just falling down. Pretty sweet. So anyway, so the actionable signal here, there was to trigger the 2 up, 2 down week, you had a 2 up, 2 down day. So do you see how everything is fractal? So this 2 up, 2 down day is what triggered the 2 up, 2 down week. So the perfect entry was at 72.90 to trigger the 2 up, 2 down week, okay? And per the strat sheet that me and Costume More just edited, your stops are on the sheet as well, and it just goes above your entry candle. Because if this 2 up and 2 down trigger and it starts failing and coming back through, you're wrong. It's not time, we're not ready. So you always want to have your stop in place. So Chewy, okay, so we've got a 2 down and another 2 down. So now we have continuations. So what you would really like to see Chewy do is one of 2 things. You want either an inside day tomorrow and then a 2 down to hit your target. So tomorrow would be what, Wednesday? We're closed Thursday, so then you would want Friday a 2-1-2 down, and you would want to hit your 60.45 target then. Or you would want a 2 up tomorrow followed by a 2 down. So you want a reversal to happen. You want some sort of corrective activity to happen. This is why I don't play 2-2 continuations. What went outside month already? Okay, so I'm gonna make this big for you guys for just a second. So if you want to screenshot these rules, okay, I'll leave it alone. If you want to screenshot the rules, go ahead and do it now. 3, 2, 1. Okay, time done. What did I just post? I posted about Teladoc. was the other one? It was Teladoc and what? They were identical. I forget. Okay, so Teladoc on the monthly was double threes, but that's fine. You don't treat it any different than you would if this was a 2. It's the same rules still apply. So we have our 50% retracement line at 136.92 on the monthly. So we knew we went up, we started failing, coming back down, selling, selling, selling. Oh, we're halfway through last month's candle. So that's when you can pretty much put on a trade, you know, betting we're going to at least hit 120.67 before the month is over. Okay, because we're playing monthly candles, so you play your time frame. Okay, if we look at the weekly, the only actionable signal was up here at the top. This was gorgeous, actually, because we had a 3, a 2 up, and then a 2 down. So on the Strat combo sheet, this is on there, right? It is. Okay. And then Teladoc on the daily had a beautiful 2 up, 2 down reversal, which still kept you under the 50% retracement, so still kept us bearish. And bam, in 2 days, you got a $17 move plus. I don't know anything about debt ceilings and any of that. I trade price action. I'm not, people think I'm smart. I'm not a smart person. I mean, I'm not stupid, but you don't need to be smart to trade the Strat, which is what's so amazing. MA went outside month back to back, so like Teladoc did. Sure did. Wow, look at that weekly broadening formation. That's beautiful. Dun, 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 dun. And the goal is always just to make a new low compared to the previous low. BA, did BA do it yet? So I'm not trading this week. Ooh, yeah, so BA, I already have it all drawn up. Because it's a beautiful weekly broadening formation. So let's go ahead and throw the fib on there. Not that it matters at this point because we're so much below the 50%. But you could have been looking for signal short at 218, anticipating we're going to come and take out 204.60. Now, this was hard on the daily because actually it wasn't. Okay, so on this day, we hit a new high, which is the high of the weekly here. That's what that is. And then you got a 2 down, 2 up reversal that failed. So you should have been looking short when this day opened because the bulls weren't here. They should have taken it up and made another new high, but they didn't. So we were at short-term exhaustion risk because we had just made a new high compared to this high. So that's how broadening formations happen. These are not breakouts. It's when price has done what it's supposed to do, it's hit its target, and then it starts to retreat. So the only entry was right here at 225. The only actionable signal entry, I should say. 2 up, 2 down, reversal. That was a great example. So your target is the 204.60. And why is it 204.60? Because we're expecting back-to-back outside months. And in order for that to happen, we have to take out last month's low. Oh, yeah. AFRM was one of them. Okay, so here's AFRM. It took out one side of the previous candle, yes. Did it retrace 50% or more of the previous candle? Yes. Cool. What's our target? 106.80. How do we get in? We look for actionable strat signals right here. You had a 3-1-2 down on the weekly. So you could have entered when we opened this week and broke the inside week to the downside. Or on the daily, you had a 3, 2 up, 2 down reversal. So you can take this and in your mind be forward thinking and say, you short here. So if I short at 149.90, can I get to the 50% retracement rule for the potential outside month? The answer was yes. It's good that you're having corrective activity today or a pause in price action because we've been straight down for 4 days and we don't want to enter on continuations. We want to enter on strat reversals, 2-2 reversals, 2-1-2. You know, you want corrective activity. You don't want to continue to short into the lows. And yes, this works on all time frames. So if you're a day trader, okay, well, I'm a day trader, but I get my day trades from all of this information as well. The Y is trying to make a new outside month. Oh, a double outside month. So let's look at that. So rule 1, did we take out one side of the previous candle? Yes, we did. We took out the top side first. Did we retrace more than 50% of the previous closed candle? Yes, we did. Okay, so you now know anytime we're under 44.60, you're looking for actionable signals to get in short with your target being 36.62. Now you do have to be mindful of how much time is left in your candle because if we run out of time, then this is not going to become an outside month. It would be impossible. We would start a new candle. So you always have to be mindful of your candle, your time frame, how much time is left in your candle. All right, so let's go to the daily. This just fell off a cliff. And do you want to know why? There, okay, so the weekly, there's why. You had a 2-1-2 reversal, okay? Then on the daily, you have a massive pivot machine gun, which is why price is falling as fast as it is. You see all these higher lows. So it's just going because people have stops placed at the lows of candles. That's just where people and machines put their stops. So that's why price is accelerating so fast to the downside. There's a good little screenshot too if anybody wants to save that. Took out one side, fell through, took out the other side. Bam. Your short entry was at 348. Your short target was at 328. A $20 move that happened in 2 days. So this day and this day. Amazing! Look at this broadening formation. What's the point? How does it work? A new high, a new low, a new high, a new low, a new high, a new low, a new high. We're coming, we made a new low. So it just looks like the greater than sign. Nom, 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 nom. It's hungry for turkey and Thanksgiving and dressing and all that yummy food. Okay, all right, guys. Thanks for watching. Holy cow, thank you, Julio. Appreciate that fat $50 donation. Wow. Happy Thanksgiving, everyone.